Welcome, everybody. I would like to start by acknowledging that I am privileged to live and work on the traditional and unceded territories of the Kwikwetlin Nations, which lies within the shared territories of the Tsleil-Waututh, Ketsi, Musqueam, Kikite, Squamish, and Stoyo Nations. I would like to encourage all of you to take 10 to 15 seconds to acknowledge the lands that you are on. Thank you. Hello, Makadi, Namaste, Namskara, Sat Sri Akalau, Yabuseyo, Hola, Konnichiwa, Komusta, Ciao, Ni hao, Ni hao ma, Habari, and Lewo. Robert Kiyosaki said it best when he said, lack of information is the #1 barrier to wealth. I would like to add to that and say, as international students, lack of information means missing out on opportunities or making mistakes that could be avoided otherwise. We are excited to have a great panel today. They're all subject matter experts, and they will speak on the different topics ranging from immigration to taxation, law. I encourage you to write down all the questions that come to your mind as you listen. At the end, you will get an opportunity to ask the questions. It's not often that you get all these amazing professionals in one room, so that you can ask all those burning questions that you have when it comes to studying your business here in Canada as an international student. I would like to go ahead and go to my first speaker. Our first speaker is Dawn Stevens. Dawn is a seasoned immigration consultant and human resource professional. He assists skilled workers, family members, and business people to immigrate to Canada. I can vouch on the fact that Dawn has helped many, many people go through this process. So Dawn, I'm gonna pass the mic to you, and you have about 10 minutes. Please go ahead.
Thank you very much, Trish. Yes, I'd like to thank you all for having me here today, and I hope I can provide you with a little bit of insight into what it means to run a business and how the students of this world are really the future, and so many foreign students particularly. I started in the immigration field 31 years ago, and I'm still here. Considering that most businesses don't last beyond 5 years, there may be 1 or 2 reasons for that. In any event, the lifeblood of any business is repeat business or referral business. And if you are good at what you do, which you all should be, and you provide positive, substantive service to your clients, then they will do referrals for you and you'll stay in business for 31 years, one hopes. My field is ever evolving, ever changing, and since I began that many years ago, I've seen a dramatic expansion in the numbers of people that we're able to bring to this country and help flourish in this country. New immigrants have a substantial history of providing their hearts and their souls to this country, and they create wonderful fabric to Canada. My ancestors immigrated from Iceland on one side of the family in 1885, and on the other side of the family from Europe in 1907. And they created very strong families and really were the pioneers of this country. We're in a new age, but still very much in a pioneering mode, because every day is a new day. COVID-19 has proven that, and it has put us in a position where we have to adjust and deal with what is. and then get through to the next level. On the point of where we're going with immigration, the new minister has projected that he would like to see 1.2 million new immigrants come to Canada over the next 3 years, averaging about 400,000 per year. So Canada is still very much open for business in that way. As we've seen, the best way to come to this country, or amongst a variety of ways, of course, is as a student. If you're able to come as a student, you're able to get an education in Canada and learn about Canada from many different aspects, and learn about the systems that are created here to accommodate business and individuals and their lives in Canada. As a student, it's a great chance for you to experiment. And that is really the best way to know what it is that you want to do in the future. If business is your goal, if you really are interested in creating and maintaining a business in Canada, there's no better way than as a student to start part-time work with your off-campus work visa and try as many businesses as you can. Find out what it is that you actually really want to do every day of the week, because that's what business is all about. Particularly since the inception of the cell phone. It never leaves you, no matter where you are, no matter what time of the day or night. So on that, on that vein, take your time. Don't rush into it. Learn as much as you can. You have part-time work during the year, full-time work during the summer, and then after you graduate with your degree, you have a 3-year open work visa. So a 3-year open work visa is the best time that you can to experiment with different businesses. Find something you like, work at it, work hard, and start to develop, your connections within it. Along the way, if you are working hard, obviously, and you have positive employers, then that is your chance to become a permanent resident. Because as many of you will know, upon graduation, it's time to start finding that employer who will help you through the process. Virtually all the skilled worker type applications, be they from students or LMIA-based work permits, everyone has to go through the process of applying, and it's a competitive system now. So the more points you get, the better. And the best way to get most points is through an education in Canada, years of work experience in Canada, and an employer who will sponsor you. Without that combination, it becomes quite problematic. There are many different types of application a graduate can make. Of course, you have the Federal Skilled Worker Program. If you have overseas degree and work experience, you can tap into possibly the Federal Skilled Worker or Federal Skilled Trades, or once you get experience in Canada, you can combine what you've done in the past with a Canadian Experience Class application. Then, if you qualify in any of those main streams, then you go on to an express entry application through the federal system and are able to qualify for PR. With COVID, it's causing some delays in the system, but anyone who's here in Canada and is legally in Canada while they apply for immigration, they can typically stay here and have the process completed entirely within Canada. As a student, recently graduated only in Canada, you're probably looking at the BCPNP programs. So that would be the post-grad, international grad, or international post-grad programs, depending on what level you are at. Again, after school, you'll have to find that employer that will help you through the process, and at the end of the day, be able to sponsor you through the Express Entry program, and then you'll get your PR. That's really the time, in my belief, that if you're ready to start in business, that would be the first time you would want to look at it. Prior to getting PR, you could apply on a work permit, or rather you could run your own business on a work permit, but there's questions as to whether or not you can actually sponsor yourself. There are some work permits that are issued by the federal government that are specific to that, but the post-grad work permit may not be that one. So word of caution there. If you're very, very eager, that'll show up in your day-to-day work with your post-grad employer. And at the end of it, I'm sure you'll know what it is that you want to do in terms of business, and then you can pursue that from there. I don't want to get into too much more detail at this point. If you have specific questions on a type of application that you're thinking about, you can transmit those to me in this forum or outside, and I can respond to that. Typically, we like to see a person's detailed background to know what it is that they are best suited for, and then we can help them from there. I think that's all that I can say on this subject right now. If there are specific questions, though, I'm happy to take them at this time.
Thank you so much, Don.
Sure.
We're going to take questions at the end.
Okay.
And I just wanted to also let the participants know that, yes, you covered about studying a business after they graduate, but yeah, through SFU and through the programs that we are running, they can actually start their businesses while they are in school. Hopefully, yeah, Jane will be able to cover part of that. Yeah. And I just saw someone who put in the comment that they have a question. You will get an opportunity to ask your questions at the end. Mm-hmm. Thank you so much, Don. Okay. Our next speaker is Jean Lomas. Jean is an international student advisor, immigration specialist in the International Services for Students, also known as ISS at SFU. Jean provides non-academic advice to help international students and their families navigate the complexities of Canadian immigration. So Jean, I'm going to pass over the mic to you. You can go ahead.
Thank you, Trish. So hello, everyone, and welcome. Thanks so much to Trish and her team for inviting me to speak with you today. As Trish mentioned, my name is Jean Lomas. I'm an international student advisor, immigration specialist in the ISS office at SFU. And today I'm going to talk to you a little bit about the eligibility requirements you need to meet to legally work in Canada as an international student. I'd like to just start this presentation with a bit of a disclaimer, since you've probably noticed, particularly this year, that the rules seem to be constantly changing. The information I'm sharing today is current as of today's date, which for those of you watching this session recording is December 2nd, 2020. How did December get here so quickly? I have no idea, but here we are. So next slide. So I thought it would be helpful just to talk a little bit about the work that we do with international students at SFU and the support that's available to you as an SFU student. As Trish mentioned and as I echoed, I'm very fortunate to be part of an amazing team in the ISS office, where we offer a range of non-academic services to help support you during your time as an international student at SFU. You can see a list of what we offer on this slide. If you're looking to connect with an international student advisor for questions about your temporary immigration documents, work eligibility, or medical insurance as an international student, you can reach us in a number of ways. Currently, we're closed for in-person services, as many places are, and we're all working remotely, but we're offering advising using a number of virtual methods, including email, live chat, which is like an online messaging system, phone, and virtual drop-ins or booked appointments as well via Zoom. Another great resource, and probably the first one I would strongly encourage you to access when you have questions, is actually our website, where you can find the answers to really the most common questions that we receive from students. So the website includes guides with step-by-step instructions on how to apply for or extend your study permit, your work permit, or your temporary resident visa, information on medical insurance, as well as enrollment requirements, work eligibility, and more, really. So those are available 24 hours a day, 7 days a week. So we always recommend those self-guided resources as a first step to get your questions answered. We have a new resource handout specific to self-employment and entrepreneurship for international students, which you can also find on our website, and which includes a lot of the information we'll discuss today. Moving on to the next slide. So what is work in the immigration context anyway? Canada's immigration and refugee protection regulations define work as an activity for which wages are paid or commission is earned, or that is in direct competition with the activities of Canadian citizens or permanent residents in the Canadian labor market. So you'll note that this is an or and not an and. This means that activities that fall within this definition, even if they're unpaid or pre-revenue in case of a startup business, are considered work and thus require the correct authorization to work in Canada. That authorization could be a valid work permit or a valid study permit and meeting the work eligibility requirements. From an immigration perspective, student work authorization in Canada, including work you do on your own business or as an independent contractor while you are a student, normally falls within one of three categories. So there's on-campus work, we have off-campus work, or co-op work as well. Each of these categories has specific requirements that you need to meet, along with some restrictions. So we'll get into those on the next slides.
Jean?
Yes.
I can get you to slow down just a bit, given that some of the students might have English as a second language. If you can,
I can slow down. Okay.
Thank you.
So as a study permit holder, you're probably already aware that you're required to actively pursue your studies in Canada and make reasonable progress towards completion of your program. From IRCC's perspective, this means you need to remain enrolled in each academic session during your studies in Canada. For undergraduate students, this means the spring and fall terms, and for graduate students, you're generally expected to enroll year-round unless you're on an approved leave. Your study permit will allow you to legally work on and or off campus under certain circumstances. The eligibility requirements to work as a student apply regardless of whether you're working for yourself or another employer. To work on campus, you must be enrolled full-time at SFU in the term you wish to work. So generally speaking, full-time for undergraduate students at SFU means being enrolled in at least 9 units per term or a co-op work term. For graduate students, if you're in a per term fee program, you're considered to be full-time if you're enrolled for a given term. And if you're in a per unit fee program, you are full-time if you enroll in at least 6 units per term. You can find a full definition of how SFU defines full-time enrollment in the enrollment requirements section of our website, which was linked on the previous slide. You have to hold a valid study permit as well to work on campus, and that permit must include a condition printed on the document stating that you may work or may accept employment. Now, to work off campus, in addition to being enrolled full-time and holding a valid study permit with work conditions, you must be enrolled in a program at SFU that is at least 6 months in length and leads to a degree, diploma, or certificate. There is a limit to the number of hours you may work off campus, which Don alluded to in his presentation. So generally, you may work no more than 20 hours per week during the regular term, but you can work full-time during scheduled breaks. So for example, breaks between full-time terms or the summer term for undergraduate students, provided you enroll full-time immediately before and after that term. You can find details of how SFU defines a scheduled break on our enrollment requirements website as well. If you're self-employed and working under the authorization provided by your study permit, just a note that we recommend that you keep a record of your hours of work as well as your location at the time the work was performed, in case IRCC contacts you to verify your compliance with the conditions of your stay in Canada. So on the next slide, just a couple of other categories of work that do not fall within your study permit authorization and will then require a work permit. So if you're accepted into an SFU co-op program and you plan to pursue the e-co-op option through Venture Connection, you will require a valid co-op work permit to do your co-op work terms in Canada. Your co-op coordinator would provide a letter for you to use to apply for that work permit. Looking further ahead to after you complete your SFU program, as Dawn mentioned previously, you may also be eligible for a post-graduation work permit of up to 3 years in length if you were continuously enrolled full-time in all required terms throughout your program, with possible exceptions made in the case of part-time enrollment in your final term of studies only, or an authorized leave of less than 150 days if you're a graduate student and can apply for an approved leave. So if receiving a post-graduation work permit after your studies is a priority for you, please ensure that you maintain full-time enrollment in spring and fall for undergraduate students and really year-round for most graduate students. We do see work permit refusals in cases where students did not meet the full-time requirement, so it's very important. The post-graduation work permit is an open work permit, which does allow you to work for any employer, including yourself. And on that note, that's it. I'd just like to thank you for coming or for watching if you're viewing the recording, and invite you to reach out to us after the session if you need further one-on-one guidance. I'll also be here for the Q&A period after everyone's finished speaking. And now I'll pass the floor back to Trish to introduce the next speaker. Thank you.
Can't hear you, Trish.
Well, thank you.
There we go.
Thank you so much, Jean. I was saying that so much information, which is also changing, as you said, due to COVID, and students are now taking classes online. So there's a lot to be processing, and it's always changing. So I'm glad that your office is there, and students can always come to your office with additional questions. We are now going to move on to the legal side of things. No matter where you go around the world, you will have to follow the business laws of the land. Business laws have evolved over centuries, and they continue and constantly morph to adapt to changes in technology, in society, and many other factors. So my next speaker is Michael Waters. Mike practices corporate and securities law with particular emphasis on corporate finance with BLG, which is Borden Ladner Vice. Michael is one of the founders of BLG's startup and Grow TM, I'm not sure what the TM stands for, but Grow TM initiative, offering legal solutions tailored to entrepreneurs, startups, and early stage companies, primarily in the technology sector. So Mike is going to talk about what you need to look out for in what business laws, what laws apply to what. So I'm going to pass the mic to you, Mike.
Great, thank you very much. Trish, thanks so much for the invitation to speak today. As Trish mentioned, I'm a partner with Borden Ladner Gervais. Borden Ladner Gervais is one of the largest business law firms in Canada, with offices in all the major business centers in Canada. I'm based in Vancouver, Canada, as you may have guessed from my background. And I will be touching on sort of some key foundational corporation legal matters for founders that are considering starting up a new business in Canada. And I'll just start by saying we have a great relationship with SFU and the entrepreneurship program, and really just delighted to have a chance to speak as part of this forum today. So if I could move to the next slide. So I'm going to at a very high level, with only sort of 10 minutes here, I'm going to chat a little bit about why you might want to consider incorporating and what that looks like in Canada, including the incorporation process. I'll touch very quickly on sort of the ownership structure and considerations, very little bit about the shares you'd issue to founders, and a very little bit about founder share vesting and founder shareholders agreements, just to sort of help you, give you some awareness to some of the high level issues you should be thinking about. And then we'd encourage you to sort of get in touch with the legal advisor if you have more questions on any of these issues down the road. So on to the next slide. So if you're starting a business in Canada, and this may be familiar with you in many common law jurisdictions, but just to get us all off on the same foot, if you're starting a business in Canada, you don't need to incorporate. You can run a business as a sole proprietorship, so you can just go out into the world and start conducting a business. There's a lot of negatives associated with that. The positive, it's simple, and you don't have to pay to form a new business. The negative is you're personally liable for any of the liabilities of the corporation, which is bad if you have any assets, and you're potentially subject to some onerous tax treatment as well too. So there's some pretty helpful tax advantages to incorporating. So in a moment, I'll walk through some of the reasons you might consider incorporating. But I did want to flag it is possible, and you'll hear of a lot of folks conducting business without incorporating, just as what we call a sole proprietorship. It's certainly possible to do. There are some negative consequences associated with running a business in that way. So if it's just one person, you could run a business as a sole proprietorship, as a corporation. If it's more than one of you, there's some other business structures available to you. I won't touch on them here other than to let you know they're available. They tend to be adopted for tax planning purposes. So if you have tax reasons for adopting something else and money's moving around through various intercompany corporate structures, we at times use some of these additional structures here. This is just to let you know they exist, and I won't say much more about them now. I'll spend the rest of the time sort of focusing on incorporation, which is the corporate structure is by far the most common, simplest, and most advantageous corporate structure for starting a new business in Canada. So on to the next slide. So what are some of the benefits of forming a corporation? So a corporation is governed by statute, by law in Canada, depending on provincial or federal law at the national level in Canada. A corporation has a separate legal entity. It's a separate legal existence. So if you incorporate a company, it can enter into contracts on its own behalf, and it shields the owners from individual liability. So as a shareholder, you have an ownership interest in the corporation, but it's the corporation as a separate legal entity that's conducting business and is subject to potential legal claims against the assets of the corporation that, except in extraordinarily rare circumstances, would not flow through to the assets of a shareholder, which is a huge, huge plus from a liability perspective for you as a founder. As part of having a separate legal existence, that's helpful if you want to sell the corporation down the road. They're immortal, so you don't have to worry about owners ceasing to exist. As I mentioned, there's preferential tax treatment. Much easier to raise capital if you're looking for people to invest. People are much more likely to invest in a corporate entity than a sole proprietorship. And then you have certain rights for shareholders that are set out under the governing statute. Okay, so I'll go to the next slide. So perhaps I've sold you on the possibility of incorporating your new business at this point if you want to start a business in Canada. We often get the question of should I incorporate my business under provincial law or federal law. So in Canada, there's the 13 individual provinces and territories. I'm, for example, in the province of British Columbia right now, and we have our own legislation, and you can set up a corporation under the governing law of any one of those jurisdictions. At the federal or national level, our federal government is the government of Canada, and it has its own legislation, and you can set up a corporation under federal legislation as well too. Sometimes people think, well, federal is bigger and better, So maybe I want to incorporate federally, and that actually tends not to be the case. There are some real advantages of incorporating provincially. The biggest one for international founders is there's a Canadian citizen director residency requirement for federal corporations. So at least 25% or 1/4 of the directors must be Canadian residents, which is tough if there's just one of you and you're not a Canadian citizen. So right away, incorporating in BC looks like a pretty helpful idea. There's some other advantages as well too. Less onerous governance requirements under provincial legislation. It's a bit cheaper because you don't, if you incorporate federally, you then have to turn around and register in any province you want to operate in, which costs a bit more money, which is what's called an extra provincial registration, or EPR. So you don't need to do that if you incorporate provincially. So with all that, my last bullet is there's tend not to be any advantage of incorporating federally. Some people still want to do it, and that's fine. We're delighted to help you do it, but most folks would decide to incorporate provincially, and from there you decide which province it makes the most sense for you to incorporate in, depending on where you plan to conduct your business activities. On to the next slide. Quick note on business names. Simply incorporating your business doesn't give you very much protection for the name of your business. So if your business, if you expect to be generating goodwill associated with the name, the brand of your business, we strongly recommend you seek trademark protection for your brand name. If you're in the business, whatever your business name is, you can seek trademark protection for that name or for that logo, but the name tends to be the one that's most important to protect. It's not that expensive. It's a few $1,000s to seek trademark protection. So definitely something to think about in a new business if you're building some goodwill associated with the name of your business. Some businesses that's not important, but it is, you should certainly think about that, and also think about your trademark strategy out in jurisdictions other than Canada and the US and internationally. We can sort of point you in the right direction there as well. On to the next slide. I won't say too much here. This is just a little bit of information about how you'd actually go about incorporating a business in Canada. All I'll say is that you can do this yourself. The filing fees are fairly, it's about $350. It's not a ton of money. There's some very good resources available online. What I will say is most folks tend to make a few mistakes, which is fine, and it costs a bit of money to fix those down the road. So it's often just costs about the same to go through a law firm. Many law firms, us included, but many law firms have some pretty good resources available for new businesses, so we can help you start up a new business on a pretty cost-effective basis. So it often makes sense to do that just because it saves you a little bit of cleanup down the road. But anyway, here's some information on how to do it yourself, should you want to. And on to the next slide. And this is just the information if you wanted to incorporate federally instead of provincially, and perhaps I've scared you all off the idea of doing that at this point anyway, but here's that information. Okay, on to the next slide. I'll finish with just a few high-level notes here. A corporation, from a governance perspective, is run by the directors of the corporation. They sort of oversee it from a governance perspective. The directors are appointed by shareholders, who are the owners of the corporation. So you as a founder would often be the sole shareholder and the sole director, and then you'd appoint yourself as an officer and give yourself whatever fancy title you care to give yourself, president and CEO perhaps. So you could hold all three of those roles, but they are distinct under corporate legislation. So from an initial share class, you'd issue yourself shares as an owner. The most common shares you have to have common shares issued, which have rights to elect directors, rights to dividends, and rights to assets on liquidation in a bankruptcy scenario. There's other types of share classes. You would typically just issue common shares at the starting point, but I wanted to where there's other types of share classes available. And on to the next slide. I'll just wait for the slide to advance. So founder shares, you'll need to think about, if there's more than one of you, you have to have that conversation about how many shares do you each get, and that's sort of an initial sort of proportion of the business. You know, is it 50-50? Is it 60-40? Is it 30-70? So it's something you'll need to think about. I'll just touch on the concept of share vesting. If you're bringing in someone to your business who's expected to work for a period of time, 1, 2, or 3 years, the shares that are issued on incorporation might vest over time, which means the company can buy them back if that person leaves before the agreed upon time. So your shares might, if you agree to work for the company for 3 years and leave after 1, the company will have the right to buy back 2/3 of the shares. So that gives the founder some protection. I won't say anything more about it here, but I wanted you to know that that's something you should think about if you're going into business with folks. And my last point, and I'll go to the next slide. Just to touch on the concept of shareholders agreements, this can often be overlooked, but if you're going into business with another person, it's important to have sort of a contractual agreement between the business founders about how you're going to run the business. How many directors will you have? How many officers will you have? When do decisions require the approval of all founders, for example, and a number of the other terms I've detailed here on this slide. So if you're starting a business with another person, definitely would strongly recommend you consider putting in a founder's shareholders agreement early in the process, and us or another law firm could help you out with that. And on to the next slide. And that is a very high level overview of some things you should be thinking about when you're starting a new business in Canada. I'd be happy to take questions as part of this presentation, or I've put my contact information here as well. If you mention that you're affiliated with the entrepreneurship program at SFU, I'll be delighted to respond to you by email. Thank you.
Thank you so much, Mike. Great information. And I think you said it best when you said it's best to avoid those costly mistakes by, seeking advice from a lawyer from the get-go, because there's so many layers that you need to consider when you're starting a business. So it is best to make sure that you're starting it in the right manner. We're going to move on to accounting and tax compliance. For that, we have Hassan Merali, who is a manager in tax and private company services, as well as high net worth group at PricewaterhouseCoopers. Hassan is trained in a Big Four environment. He focuses on private company services, working with entrepreneurs, owners, managers, and family groups by assisting them with their accounting, assurance, and tax compliance needs. I am going to pass the mic over to Hassan.
Hi, Trish. I think we'll get Verinder to present first, and I'll go right after her.
So I will introduce Verinder properly, and then you can go after Verinder. So Verinder is a senior manager at PricewaterhouseCoopers as well, and she does the private company services practice and has over 10 years of public practice experience. She specializes in providing cross-border tax planning and tax compliance services to individuals with US and Canadian tax requirements. And she will also be able to answer some of the questions with international and Canadian tax practices. So I will pass it over to Verinder.
Thank you, Trish. So far, it's been such a great information. It's a great platform for the international students who are starting up here. Can you hear properly, Trish?
Okay. Yes, we can hear you. That's correct.
Yeah, so a lot of our clients, we deal with residency a lot. A lot of our clients are from the US who are dual citizens, US citizen living in Canada, and what it means to them. Not necessarily those are the only clients we have. clients all over the world. Immigration is a hot topic, as we have seen and heard that a lot of folks are migrating here. And then today I would like to talk about residency and how in Canada residency is determined and what are the individual tax implications when you are a resident of Canada. So moving on to next slide. So in the so moving on, so yes, I will touch on residency and then what happens when you commence residency, and then you can also what happens when you cease residency, and I will talk about some of the administrative matters. So moving on to the next slide. So residency is not defined in Income Tax Act. It is based on your ties to Canada. It's not same as immigration status. You could be a Canadian citizen. You could move back. You can get a Canadian citizen, move back home, and may not be a Canadian tax resident for filing purposes. Unlike in US, a US citizen, doesn't matter they are living in the US or not, they are always taxed on their worldwide income. So for Canada, it's based on residency, not on your immigration status. And therefore, it's also based on your individual facts and circumstances, your ties to your country, to Canada. Moving on to the next slide. So the CRA, what does CRA look at? CRA looks at significant resident ties. They are primary ties, they are secondary ties. What are the primary ties? That do you have home available here for use? With your family, is your family living here? Your spouse? Do you have dependent children? Dependent would be under 18 living with you. So those are your primary ties. You could be on a work assignment, let's say in China for 2 years, but you have your family here. Your kids are here, your home is here, you have your secondary ties here, your economic, your social, your other ties are here, you're still tied back to Canada. So even you are on a work assignment, but you're still tied back to Canada. So therefore, for Canadian, in Canadian system, you're a Canadian resident, and then you are taxed on worldwide. So, and the key take point from this slide is that when we are evaluating someone's residency, we're looking at the primary ties and secondary ties. Moving on to the next slide. So there are, you could be a resident, you could be a deemed resident, you could be a non-resident, you could be a deemed non-resident, you could be a part-year resident. I'll go over all, these are the few types of status that you could be filing as. What is a resident? Resident, you have significant ties here. You're taxed on worldwide income. And what is a deemed resident? Deemed resident means that you have deemed resident that you have spent more than 183 days in Canada, and then you don't have significant ties to your home country. You have your belongings here, you have ties here. So that means that you're taxed on worldwide income. Can you hit enter? So you're taxed on worldwide income. That means, let's say you have a property in the US, it's a rental property. You're not a US person, you are not resident there. You're a Canadian resident. You have income, rental income. That means you, as a resident or a deemed resident, you're reporting that income on your Canadian tax return. There's a treaty with the US and there's treaty with many other countries. So you look into the treaty and you are not double taxed. That's where we would look into the foreign tax credit. Any taxes you are paying to US on the rental income, we would take as a foreign tax credit on the Canadian. But it is so important that when you're resident Canada or deemed resident, if you have properties elsewhere, you're earning income, it needs to be reported on your tax return. What is a non-resident? Non-resident is when you are in Canada less than 183 days, and then you don't have significant ties to Canada. So you're filing a non-resident return. Let's say a scenario is, I'm working in Canada. I was in Canada for, let's say, 150 days. So that means I'm only gonna be paying tax on my Canadian source income, not my worldwide income, because I'm tied, my significant ties are back home. I was just here and I was under the days. However, you could be also deemed non-resident, that meaning you could exceed that 183 days. Therefore, um, when and you are a tax resident in your home country, that you have ties back home. So then we look in the tiebreaker rules. You look at where the first tiebreaker rules is, where is your permanent home? Do you have home available in Canada, or you have a home available back home? And if you can't tie break on the first, then you go to the your social and economic ties. Do you have ties back stronger there, or do you have it in Canada? And if you don't tie break there, then you look at habitual abode. Basically, that means how many days have you spent here, how many days you spend there. Typically, we are able to tie it break on the second, the closer personal and social connections. That means if you are a considered resident back home, and then you're just here working and you don't have any other ties, you're still considered deemed non-resident, and then you're taxed on just the Canadian source income. And for part-year resident, for the non-resident, deemed non-resident, you be taxed only on Canadian source income, not on worldwide income. Moving on to the part-year resident, that means if you have established that you have commenced Canadian residency, then you are taxed on worldwide income from the date that you have established residency, and you are for the non-resident period is only going to be the Canadian source income. So that's why it is really important to know what is your filing status and how you filing. Where are your social ties, where are your primary ties, are you considered resident for tax purposes, and immigration purposes is different. Moving on to the next slide. So let's, now that you have commenced residency based on your on your ties, so you don't need to, there's no administrative requirements. All you need to do is, when you're filing the tax return, you need to disclose the date of entry that you commenced residency. Let's say in our case, we have an we have a student who has been living here, and date of entry is February 1st. So the February 1st, it would be February 1st, 2020 would be the date of entry for him. And that's the date when he commenced, he has established ties and he commenced Canadian residency. And then another thing to consider would be is, when you have established residency, if you had assets in your home country, let's say you had securities or portfolio, you should always document the fair market value on the date of interest, because when you sell that, you get step up in basis. The fair market value on the date that you have established residency would be your new cost base. Let's say you had a rental property back home that you had acquired for $100,000. The date you commence Canadian residency, it is at $200,000. So your new step-up basis would be $200,000. When you sell the property, that's your ACB. So it is really important to document what you came in with. Moving on to next slide. So as it is, you can commence residency, you can also cease residency. So again, we look at the ties. You don't have any primary ties here. You can sever all the secondary ties. Then you can cease residency. You were here, and let's throw an example that you were here for 4 years. You worked here. You had a family here. You had a home here. The house you want to give it for, you don't want to sell your house, but you're giving it for rental to a third party. Now you're moving back to the home, and you're taking all your belongings with you. You have severed all the ties here. Your intention is not to come back, and that's the date when you establish that you are gonna cease residency. So let's say in January, in next year, 2021, June, Mike had decided that he wants to move back home, and then what he needs to focus, he needs to be mindful of is there's something called departure tax. So departure tax is a lot of our clients that are high net worth. So we typically look at like what's in their, what do they have? They have portfolios, they have properties, they have departure tax. You're looking at the worldwide, you know. It's not only what you have in Canada. There's some exceptions, such as cash or registered accounts. Real property in Canada is not subject to departure. But if you have a house, if you have a rental property, let's say anywhere in the world, let's say in US, and then you don't, departure taxes you have deemed to disposed of. It's not a real sale, but the day I'm leaving, if I'm leaving in June of 2021, so if the fair market value is 200,000, and if I had purchased for 100,000, I'm going to be paying tax on that 100,000. The tax could be as about $27,000. So there's definitely planning opportunity when someone has big net worth and they have investment accounts and portfolios. So departure and commencing residency, these are really, really important. You should have a discussion with a tax person because there could be some planning opportunities there. And there's another exception, is the short-term residency rule, which means that if an individual who's a resident of Canada has lived in Canada for less than 60 months, sorry, and then he had acquired assets before he moved, so those will be exempt. So there's a list of exemptions as well. But these are ceasing residency, departure tax, coming to Canada, determining, again, it's all case by case, fact by fact. Moving on to the next one. So I'm just gonna give a simple example. In my example, I have Mr. Kang and his spouse. They're both Canadian citizens. They live and work in Toronto. In January of year one, Mr. Kang decided to take a position in PwC Hong Kong for 18 months. He moved to Hong Kong on February 1st and now living and working there. His wife remained in Canada and continued to live in their Canadian home. So what do you think Mr. Kang's residency status should be? So he would still be considered a Canadian resident because he has a primary ties. His main two primary ties are his spouse and home in Canada. So again, he is Canadian tax resident, and he's reporting his worldwide income. Moving on to the next slide. So what would Mr. Kang's filing position be if his wife moved with him and they rented their home to an unrelated third party? In this case, they still be considered Canadian resident, even though they moved, but they still have secondary ties. They still have investment accounts here. They still have social, economic, financial ties here. Moving on. Could you go back and hit enter? And enter again. So what if they took all their personal belongings and gave up their Canadian driver license, sold their vehicles, and no intention of returning? In this case, they would be considered part-year resident to the point, the date that they have established that they are ceasing residency. Next slide. So just administrative matters. Tax is calendar year based. January to December is the tax year, and the returns is due April 30th. That's the general filing due date. separate filing needs to be filed for a married couple. Separate return, there's no joint return. There's a federal and provincial taxes. The highest tax rate in combined in BC is 53.5%. And balance payable is on April 30th. So that's just a very general discussion on residency and filing. I have not gone into like how income is sourced, how income is reported. That is again to be discussed. It's case by case, and it could be simple to very complex. You know, it depends on each client's situation. So if anyone has any questions, I'd be happy to help. And the Q&A, I'll pass on to Hassan, and he will talk about corporations now that I guess most of them have incorporated.
Thank you so much, Farinda. Hassan, I already introduced you, so I will let you take it away.
Sure, I actually have a slide deck as well. Can I share my screen, or do you have a copy of it?
You can share your screen.
Sure. Okay, can everyone see my screen here? Okay. So I'll be discussing accounting and tax for businesses. So I'm going to try to keep it super higher level and just go over the main topics I feel newly incorporated companies should be aware of. So basically just outlining my agenda here, I'm going to go over financial statements, corporate tax, payroll, and GST. So what is a financial statement? So financial statements are reports that summarize important financial information about your business. So there's three main reports, which you may already know of: the balance sheet, the income statement, and the cash flow statement. So there's three types of engagements an accountant can help you with when it comes to financial statements. First one is a compilation. It's also called a notice to reader. It's the most common option. As the name states, the accountant basically compiles the financial information provided by the client. No assurance, meaning the information is not verified, and it's perfect for filing a tax return. A review, it provides limited assurance, or in some cases a negative assurance. So basically, it takes what we do in a compilation and use analytical procedures and inquiry to verify the balances. An audit, which most people would have heard, it's the highest level of assurance. It builds on the review engagement, but it takes on a more substantive approach. So in an audit, you're basically looking at invoices, or you're overseeing physical inventory to confirm the balances are correct. So next slide here. Why do we need financial statements? So the CRA requires it. They require it when you're filing your tax return, like your corporate tax return, for decision-making purposes. So as I mentioned, like financial statements give you a good financial snapshot of your company, and it's a good way to make smart business decisions. And for borrowing, so lenders require financial statements to assess the likelihood of you repaying any of the loans. And for potential future sales. So for buyers, it gives you a good indication of the health of the company, the valuation, tells them what they are buying. To prepare financial statements, you can do bookkeeping. So there's softwares like QuickBooks or Sage where you can record your monthly bank and credit card transactions. And once you incorporate on your first tax filing, you're required to choose a fiscal year end. So typically what we've seen is companies choose December 31st just because it's administratively, it's a simple process because it lines up with the personal tax deadline. But you can you have your option of where to on what date you want to choose for your fiscal year end. So corporate tax. So as I mentioned, once you have a corporation, your corporate tax return is due 6 months after year end. But keep in mind, just because the filing deadline is 6 months after, your taxes are normally due 2 months after year end. There's a bullet here for CCPC, meaning Canadian Controlled Private Corporation, which I'll get into in my further slides. But if you are a CCPC, you actually have 3 months after year end to pay your taxes. So what is a CCPC? So basically, it's a private company that's controlled by a Canadian resident or by Canadian residents. And you may ask, like, why is that even important? But why you want to be a CCPC? Basically, you have access to a small business deduction, which is essentially lower tax rates. And you're eligible for the qualified small business corporation status. And what that means is when you're eventually looking to sell your business, you can tap into a lifetime capital gain exemption, which essentially either reduces or eliminates all the taxes you would have from that sale. So like the slide says, in other words, being a CCPC is essentially money in your pockets. So what is a small business deduction? Essentially, it reduces your overall tax that a corporation will have to pay on the first $500,000 of active business income. So effective this year, federally it's 9%, and if you look at federal and provincial, it's 11% combined. So I got a good example just to see what sort of tax savings you can potentially have by being a small business deduction. So in this case, there's two companies on this graph. One is eligible for the SPD and one is not eligible for it. So let's say income earned by the business is $10,000. In this case, case one, if you're not eligible for the small business deduction, you're paying corporate tax at 27%, which triggers $2,700 of taxes. So your income net of taxes would be $7,300. In comparison, so if you're a CCPC and you qualify for the small business deduction, your taxes are only at 11%, so you pay $1,100 taxes, and your income net of taxes is $8,900. So just in like income of $10,000, you're saving about $1,600 worth of taxes. So it's important to know if you qualify to be a CCPC and if you're eligible for the SPD. So you do all this work in incorporating a company, and you obviously want to know like what's the best way you can actually pay yourself, right? So there's three main options. There's dividends, there's salaries, or there's selling your shares. I'm not going to go into each of the tax consequences, but each one of them have different tax considerations to be aware of. And if you want more details, just shoot me a question on the Q&A. So just going to touch on payroll here. So normally when you incorporate, you're given a business number by the CRA. And then if you're choosing to have employees or pay yourself a salary, you should open up a payroll account. So I just want to highlight to do that. If you go to your CRA My account, if you've registered for one, you can create one using the business registration online, or alternatively, you can call the CRA and they can create one for you. And why is that important? So basically, when you have payroll, you have to make monthly payroll remittances. So normally, if you have payroll, your payroll remittances, which is your tax, CPP, and EI that you withhold, it's due on the 15th of the following month. So just to drive this point home, I have a couple examples here. So number one, if you hire an employee on March 11th and you pay them bi-weekly, then their first pay is on March 25th. So based on what I had said previously, when you're withholding taxes, that will be due on the next month on the 15th day, so April 15th. Alternatively, if you hire an employee on March 25th and pay them on April 3rd, your first remittance due date would be May 15th, so 15th of the following month. And one thing to keep in mind is when you're paying out payroll and salary, you're required to also be filing a T4, which is your income slip. And that's due for all corporations on February 28th. So just keep that in mind. So even if you don't have employees, but you're paying yourself, you still got to be filing a T4. And that's picked up on your personal tax returns. So to help you with your payroll, there's third-party payroll providers such as Ceridian or ADP, or there's good accounting softwares which you can use that have a payroll module. So Sage 50, which is like Simply Accounting, or QuickBooks Online. Those are good systems to have to calculate your payroll for you. And my last slide here, GST and PST. So I'll just focus on GST here. When do you have to register? So this applies for both corporations and individuals. When your sales are greater than $30,000 over 4 quarters, you're required to start collecting GST. So you want to factor that in when you're commercializing your business and getting sales. Once you hit the $30,000 mark, you should be charging GST technically. One thing to know is that when you are charging GST, you should be putting the GST number on your invoices, just so vendors know that you are registered for GST and that they can claim the input tax credits. And the way GST works, just to quickly summarize, is once you collect GST, you're required to remit that to the CRA. But if you pay any input tax credits, meaning if you pay any GST on your purchases, you can offset the GST that you collected to reduce what you owe the CRA or potentially get a refund on the input tax credits. So like I said, this is super higher level. There's a lot more in corporate tax that maybe you should be aware of. And if you have any questions, you can always obviously send me an email or follow up with me on the Q&A here.